Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. The world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got inside. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Go back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hope you are all rested after that crazy FOMC day yesterday. We got news here in about 2.5 minutes, so I'm going to just go here really quick. Treasuries, big move up off of the FOMC meeting, but they are coming back a little bit, and we've got some news coming out here. We got the jobless claims, a pretty important piece of news, and then tomorrow we got non-farms. So the story is not done yet. In the S&P 500, kind of a similar thing, big move up, but a slight pullback, and really everything went up. Oil, natural gas, gold, even gold and silver, copper, although copper is retracing more aggressively here this morning. Bitcoin, a slight improvement, but still struggling to get above 4,000. And then we've got the dollar, just about the only thing that didn't go up, although that is recovering here this morning. Well, that's very interesting that the dollar continues to be resilient. And that's where we're at here this morning. And we've got in a minute and a half, U.S. initial jobless claims, productivity, preliminary, labor costs, soybean numbers too. So we this whole situation could change very quickly, right? But more tactically, where we had gotten long from yesterday at 118.31 is still kind of the price. So they kind of they are balancing back across the area that we end up averaging in our position, which makes sense, right? We're averaging in, that's kind of just end up being the center point. So has nothing to do with me, although it sure makes you seem like that the market's picking on you, doesn't it? Oh man, oh my head, I'm sweating a little bit. It's hot in this room, man. Like the heater turned on. I don't know. I have a really hard time keeping this room cool. I just need to get a heat pump for this channel. All right, and got a couple of other things that we got to do here this morning too, but let's get the news out of the way first. Well, the liquidity in the micro, not too great, especially the 5-year is always just terrible. Okay, here we go. Here we're getting the news.
Prelim minus 7.5%, minus 7.
Okay, so jobless claims was 200,000 versus an expected 200. Oh, I'm having some problems with financial juicing. I have to restart my squawk here.
US continued jobless
There we
claims
go.
at 1.384 million, 1.38.
Let's see here. What about labor cost preliminary? 11.6 versus an expected 10. So that's not good.
118.8K.
So
118.8K.
that's a little bit mixed, but the initial jobless claims is a much more significant piece of news, and that was slightly worse than expected. I wouldn't say that it's absolutely terrible. Like a 20,000 difference is kind of within the range of error. It doesn't look like the market is reacting to that too strongly.
Also seeing comments from Bank of England.
We got here Brad, Marty, Octavius. Good morning. Hey, we got like everybody's here early and everything. I'm feeling good. I'm feeling a lot better than yesterday, man. I was so tired yesterday. I came in, I was tripping over things, and first thing I did yesterday, wake up and ran over the air filter, came downstairs, tripped on things. It was really late to start the stream. Like yesterday was just bad all around. For us, you know what? I actually lost money yesterday, at least in the futures account, but only $7 in the end, which was like so lucky. I feel like I was so lucky because that's the sort of day that turns into like a minus $50, $100, right? And then, but then, you know, the news, the FOMC, I think we played it really well. I don't know if I don't know.
Press conference has now.
I'm trying to CTA this and hold a position long here for the short term. But at the moment, with them kind of testing below 119, the market is kind of questioning me here pretty significantly, wouldn't you say? They're thinking, well, but the world is not so great. That's what I think. That's what I think they're trying to tell me here. So we gotta have to figure out here. But you know, they're at 31. Is going to go back and forth. I might want to, if we get a move up, I do want to take some of this off so that I have some room to play with single contracts. Try and catch my one tickers again still, right? Now, what else we got going on? Oh yeah, there was some weird stuff in Discord. This guy comes into the channel and he's like, yeah, we're starting a prop firm in Dubai. We're looking for people. Okay, well, the link that he sent was into LinkedIn, so let's look at it. Boom. Let's see here. They're going to offer 30 to 70%, ranging to 70-30. Margin allocation from 50K to 500K per trader, depending on performance metrics. They have a list of kind of strategies they want you to use. Calendar spreads, momentum ignition, fading exhaustion, short-term swing. 20% annualized returns on margin. Experienced traders, they have minimum 3 years track record using trade platforms like Xtrader and ZUG. Yeah, I'm a little, well, is the world going to end if CL goes above 110? Oh man. Oil is high, isn't it? Well, I'm actually, I don't know. Something is going on in the oil market right now, and I don't think that we're privy to what's really going on. But I saw a story yesterday that one of the Biden administration foreign policy guys had I think it was like the CIA director, had a secret meeting with the notorious MBS, and that it went well. So I don't know if that means that OPEC is going to open the spigots a little bit more. But, you know, oil for the time being seems to be trading mostly off of the economy. But what do you think I should do with this guy? Should I let him post his link? Good grief. Try to move the water bottle. This stand for the microphone is really good, but I like to have it close, and sometimes it's not. The reality is the microphone is probably not the best. Probably next thing on my list is new microphones. I actually have, you know, there's a couple of things that I wanted to do, and I'm like, oh, I could do those now. But I don't know if I don't really like spending the money. I am going to buy some better stands for these cameras and stuff so that when I'm moving the camera, it's easier to move it. But then after that, then it gets a little bit more, you know, torn. I'm torn about what I want to do because I would really like a better microphone for the video. The audio sounds great on the stream, but I do not like having the microphone like right in my face when I'm trying to, you know, my hands everywhere and stuff. I just don't like it. And So I could get a shotgun microphone. But then the other thing is I want to get like the paid version of DaVinci Resolve. That would be nice to have as well. Then we could get better colors. I don't know if that really matters. I don't know if that one would really make that big of a difference. I think probably I should get the microphone first. Yeah, but then it's, do we need to have a super, super nice one? Because I could spend like $1,000 on a microphone. Then I would probably want to save up a little bit more. Well, they're trying to get some movement here in the Treasury, but it doesn't seem like it's going just yet. If I was to choose a direction, it would definitely be up, but they're just not going. Ceiling mount mic, no. We'd just get a boom stand and a shotgun microphone that would be pointed directly at my face, just outside of the video field of view, probably. I don't know. I need to go back through. I think that DaVinci Resolve, some of the pro features will make it function better. So I need to look. If those extra features in DaVinci makes it faster, then I probably should do that, because if I can edit faster, that's a bigger boon to the channel. Otherwise, I think that improving the audio would be better. Even though, it's not like, I don't know. The quality of the audio is pretty good. So that's when I'm just kind of like, well, let's just sit here and do nothing. Take care of the one thing that irks me, which is when I try and take the camera out, I have to like unscrew the base plate, and it takes a long time to set things up. I fix that first, and then it will work from there. Yeah. Okay. So anyways, I got a little distracted. I'm being ADHD. So this guy that's posting about a prop firm, what should we do? I think that I will post the link. I'll post the link, but I will tell people, proceed at your own, proceed with caution. They're not paying you, so that's a little. It might be legit though. Could be legit. I don't know. Chronos invest. I don't think that very many people in here would be really eligible to take advantage of that anyways. So. I've been getting a lot of messages lately, both in our work email here for the channel, but then also on LinkedIn. But most of what I get sent on LinkedIn is like meh nonsense. Well, now they started testing the downside, and they made some significant progress there, didn't they? Maybe they don't have the oomph to move up today. Now I'm already trying to read LinkedIn posts. I probably shouldn't have that open, because LinkedIn is just some of the best stuff I find is on LinkedIn right now. Let's go and read Twitter. Let's see what's going on. NFT sales plummet 92%. Of course they do. Nassim complaining about the Pope. Let's see here, Brannigan Barrett. Last night, the Fed clearly notified markets that there is little appetite for anything more than a couple of 50 basis point hikes, which were already priced. Today, the risk is the Bank of England does exactly the same. The UK economy has stagnated and the market has 6 by 25 basis point hikes priced for the next 6 meetings. This rate path of hikes, well warranted given inflation, is not a path Bailey and his brand of merry bankers will pursue. No central banker will purposefully push their economy into recession. It is highly probable we have a dovish outcome today. Oh wait, so they didn't already have it? I thought that always comes overnight. Let's see here. I would open up here the Great British Pound. Okay. Oh, well, but that was an hour ago. Governor Bailey speaks at 5:30. Press conference. Oh, emergency meeting of some sort. I didn't see anything about that in my morning. Well, at least I don't remember. Let's come here and check through. U.S. productivity just crashed the most since 1947 as labor costs explode. But real compensation tumbled 5.5% in Q1. Yes, that's not good. Markets are at risk of another major deleveraging event. I agree. Even though I haven't read that, I think that, especially here in the commodities complex, I still see some problems. See here, I see Bank of England hikes 25 basis points to 1% in a 6-3 split vote, warns of UK recession later this year. And if I look at the 6B, their currency is getting pretty hammered today. Yeah, okay. Gold's got a good bid. They're back up above 1900. As long as gold is above 1900, I'm kind of like, I'm okay with gold. You know? You know what I mean? Anyways, back over here. Let's just go a little bit further back in my feed. Just make sure I didn't miss anything too interesting. Yeah. Oh, there you go. Anthony Cordelli says some macro traders will pick apart the FOMC meeting and conference today, but at the end of the day, the market spoke, and that's all you need to know. Well, no, I think that you got to understand it. You got to understand it. But here's the thing that you got to remember is that it's not just the fundamentals. Like, you can come in and the simple method of figuring things out that the beginning trader wants to say is, what was the action taken, and is that action good or bad for markets? And then you trade accordingly. So if the Federal Reserve comes in and raises interest rates, that is bad for markets. The market should move down. But the real story that is going on is much more complicated than that. And how that causes people to buy or sell things is much more complicated than that, right? People were worried about the everybody knew that the Federal Reserve was going to raise 50 basis points, right? So they were already selling days ago, months ago, frankly, now at this point. It's May. Can you believe it's May? This has gone down so quickly. Why does the USD go down if the Fed? Well, so that's a good part of this story here, I think. Okay, so people have been selling interest rates for a while, right? But remember what the story going into the Federal Reserve meeting was, okay? One Federal Reserve member came out and said, maybe we even do a 75 basis point hike. Market flipped out. Several days later, other members of the Federal Reserve in their meetings, at least two of them, if I recall correctly, said, nah, I don't think that we need a 75 basis point hike. But then we went into the blackout period, which means no Fed speakers. We don't get to hear what the Federal Reserve is thinking. Okay, so we can have 2 weeks to marinate on this. People betting that there's going to be 75 basis point hikes in the future. Okay, and the whole while the S&P 500 freaking out about it. So then when the meeting happens and the central bankers are still saying, yeah, no, we're not going to do a 75 basis point hike, right? Then these guys that were trying to bet on that had to give up on the trade, and that is why the markets rallied, right? So you have to think about, what are the orders going to do? And it's not just the fundamentals, right? Okay, so I really don't understand why the US dollar goes down if the Fed raises interest rates. So generally speaking, the United States having higher interest rates is good for the currency, generally speaking, okay? But again, here, the story is that the result of the Federal Reserve meeting was not as hawkish as expected, right? So because the 75 basis point hikes are off the table, that led to that selling in the dollar. But it came back. It came back. Like, I think that the story in the dollar is really still that there's a lot of risks out there, and people are kind of nervous still. You know, yesterday was a really great rally in the S&P 500. It was just one rally. They could, you know, and tomorrow the non-farms jobs number could wipe all of this out, you know. Could end up being more important than all of this potentially. So the Fed, actually the Fed is dovish. Well, they're more dovish than some market participants expected. But this is also kind of shows you where you as a retail trader can gain an edge, because we were saying this whole time that I don't think they're going to do 75 basis point hikes. Or at least I don't think that I never come out and I try and make a call like this is going to happen and I'm going to bet my reputation on it sort of thing, because I just know, like, been through this enough times to know that a lot of these events are hard to predict, right? And there's our ability to predict the future on this sort of a thing is very limited. But we can find some situations. And so yesterday, you know, I was kind of calling on my kind of more gambly side, like the sim accounts and stuff. I was saying we want to go long because the risks are actually tilted towards them being more dovish, because in all likelihood they're going to strike down the 75 basis point hike, and they're going to have to put things in their statement and what he's talking about to acknowledge the weakening conditions, the weakening economic conditions, and the continued supply disruptions. So now, from the Federal Reserve's perspective, the consumer is still strong, and I think that is a really big key, right? If we lose the consumer, that's when the market will really start to go apocalyptic, right? So we want to watch those numbers like personal spending, for instance, credit card consumption. That's not a report that like gets regularly released to the public, but we usually hear about. I'm going to bet you that if you go on Zero Hedge tonight and you look at, they'll have a story about like non-farms payroll preview. And one of the things they'll look at is like Bank of America's credit card usage report, you know, to see how much are people actually buying and so forth. And that tends to predict what the jobs reports are going to say. So we want to watch for those things, right? Because we could get those kinds of signs. Like tomorrow, we could see that the consumer is starting to weaken, or we could see some signs that it's getting stronger, and then maybe they rally even more. It does seem, though, this morning that, you know, we had the move that we had yesterday because we had some people expecting something really bad and they had to take it off. Now that that's kind of all done and over with, it does seem like that the markets, at least the treasury market, is still leaning on higher interest rates. So well, for the future, I tell you what, I never tell you guys these things while I'm doing it because I don't want, and I don't tell you what I get into. Okay. But in my retirement accounts, I put more money in. I put quite a bit more money in this last week. So I had some cash. I spent the cash that was in my trade account, and I contributed more to my IRA than usual and put it to work. So it was looking pretty good yesterday because I did most of that Tuesday and Wednesday. So I think that while there are a lot of problems and disruptions out there, and we're definitely going to see like the supply disruptions problem again, I'm not convinced that it is as it's not going to be as bad as post pandemic, right? And I don't believe that these things need to necessarily push the United States into a recession. So we because the reality is we could be in recession, technically speaking, right? But the reason that we're in a recession right now is because U.S. exports are just dismal. They're just absolutely dismal right now. So I think that that's kind of the bigger problem right now. But hopefully we're able to work those things out and we won't actually get a technical recession. But, as long as the consumer remains strong, I think that we're okay. And so far, it seems like that they have been resilient just because of like their personal, people's personal situations are still pretty good because the labor market is so strong, right? There's so many jobs out there. People are able to find jobs. So I think that we'll go through a period of high market volatility, but I don't see this as a full-on recession coming. I view this more as like if we were to say that the COVID crisis is analogous to the 2008 Great Financial Crisis, then along the way during that whole bull market, there was many periods of market panic and volatility. Periods that like under other circumstances would probably lead to a recession. Like the Euro crisis, that was a big deal, guys. The Euro crisis was like crazy, really, when you think about it. And the only reason that didn't push the world into recession was because the central banks already had super easy monetary policy. Now what we're getting is kind of the opposite, right? We're getting things that are actually relatively minor problems, but because the interest rates are rising, it's more troublesome to the market. So, but I don't think that they damaged the underlying economic conditions to really, really destroy things. So, from my perspective, I want to put money in here. And if we do end up going into a recession and there's still, like a 40% chance of that happening, then I'm going to put even more because I didn't put everything in. So that's what I'm doing. But it is hard to predict. And it's hard to predict like from day to day is the thing. Like, what is tomorrow's jobs report? I haven't done all of my research on that yet, but we have a really hard time predicting the jobs report. The best forecasters get it dead wrong so often. And especially in the post-pandemic period, we've had so many situations where all of the analysts were high, like a jobs report that beat out even the worst analyst predictions, just completely blown out of the water. So those are the sorts of things that are just like super hard to predict, right? I've tried it a few times. I'm sure that at some future point I'll probably try and convince myself that I can do it, but like trying to hold a position through non-farms on the assumption that I know which way it's going to go, bad idea, man. Bad idea. Federal Reserve meeting, it's a little bit easier to game out what's going to happen, but the big wild card in that one is the press conference, right? In fact, we had a good example of that yesterday as well, because even though I need to sit up straight, I'm developing posture problems. I need to go and walk more often, dude. So even though I'm working out, my core is not very strong because I'm just sitting all day. Anyways, when the press conference started, the first thing that Powell did was he very much stressed that they are tackling inflation. And when that happened, the interest rates just shot like the floor just completely fell out of the treasuries and they went down big. But then the whole rest of his speech was dovish. So, if you had a position on, actually we did. And what happened was we had made some and then we had to bail. And then we made more when we got back in after that. So, that's how that one goes. It can be rough sometimes. And so often the way that it plays out is like you end up being right, but just there's this one tiny detail that kind of ruins everything, It happens a lot. Well, the markets here at this location, 24.5, is an area where I would maybe expect some demand to come back in, but my reading from the book right now, I'm not really seeing that. I'm not really seeing that at all. So okay, 846. Remember that this in this location. So what we need to look out for here, number one, is if a liquidity hole forms down here off of large transactions, which we're not seeing yet. But the other thing that we could see happen is another large meta order come in and pushing the other way. This is kind of the area where you would expect to see them to maybe come in. So I want to watch the tape here a little bit and see if we start to get a rising cumulative delta. The overall movement in cumulative delta over the session in the 10-year at the very least is up. So let's just see. They did pull back 3 ticks there. Seeing much more Twitter activity starting to come in here. We're getting to the top of the hour. So we'll see if the equity indexes start doing anything. Are they going to try and sell going into the open?
Release more oil if needed.
I should change my charts over here a little bit. I do need to make sure that I've had bit. Oh, by the way, do I need to roll over? Probably it's time to roll over.
The effective Fed's fund rate as well.
Oh, maybe not.
Spot 33% for May 4th.
I guess the action in Bitcoin is just becoming. Oh, you know what I did forget to do though was had some strategies. Oh, there's a problem with these ones. I wonder what the problem is with these ones. Well, I need to look at that. Put this and minimize it. Hey, I created a strategy to collect data, and I need to make sure that I come in and turn it on every day so that we get some data, and then hopefully we can pass that into Python and we can start messing around with some machine learning algorithms on it. But I think where we're at on that is I think I've got all of the skills to put something together and get some output from it, but I don't know what to do with the output. So we'll see. We'll see where that one goes. There's a lot of work to be done on that. Can you believe I'm actually thinking about it? It's like, wow, it's Thursday. I think we'll record beginner video this weekend. There might be some things that might change on that though. And I've been writing an article about bonds. You know what happens to me a lot when I'm making these videos is I'll start writing it and I'll very quickly realize that this is actually like 5 videos, which gets complicated, but because otherwise you're going to get like a 30-minute video. I should note, by the way, that this move down in the treasuries is a retracement of earlier overnight market bearishness in the treasury market. There's some things about the setup that I've got here with my computer that are not optimal. Like this water, it should really be over here. But if I put it over here, then I can't, then it blocks the screen. So I put it over here because it doesn't block this screen. But then that means that I have to carry the water bottle over here to my right hand. And then as I'm carrying the water bottle across, it hits the microphone and then it blows your eardrums out. And that's not nice. Right?
So coming from CNN,
what do you do?
We'll see
There's no solution. There's no solution to this. It's still rotating around 24, I guess. There was 5,000 contracts traded at 23.5. Softish. That's right. We need to use our favorite word, softish. These bids still look softish to me. But 7,000 at 23.5, that's pretty good. That's pretty good. That's an amount. We're reaching amounts that could kind of, create short-term problems for the price action and get us stuck at that price. Let's see here. Can you recommend some courses about trading? Well, so let me answer that this way, Karim Bia. Is that how you say that? Bia? So I've learned, I've read so many books. I've never paid for like big expensive courses, but I have gotten some insight into some of the courses out there and so forth. I'm not going to say that like courses are worthless, okay? Because they are teaching you things that would probably be difficult to like find and aggregate on your own. But the thing that continually happens to me is I'll be following somebody, right? And I really like what they're saying, and then they do something to disappoint me, They'll take a position that is like, they release a product that I'm like, isn't very good.
Of overall stocks, we can come back
again. They start pushing the marketing side of it. Like there's just a kind of like a within the education field, I don't think that the educators' incentives are always very well aligned with yours, right? Because what you want is you want to learn as much as possible, and really all they need to do is get as many people to buy the course, and so it's really hard to find good courses in that respect. But here on our channel, it's a little bit different. And I think that that's why our channel has become such a good resource, because here, I don't get any hype from, like making this big thing. If you spend $1,000 and then once you spent the $1,000, you spent it, right? Everything on here is, do people like the video? Do they watch it all the way to the end? Right. And so we have some information on this channel, particularly the more recent videos about how to use the DOM and even more so the videos about market microstructure in the inelastic market hypothesis. That is far more advanced than anything that you're going to find on the trading courses out there. Now, I got the information that I did. I learned this stuff in books. So really what I'm doing is I'm kind of summarizing the information for you and relating it to how it is effective for trading. And then with the hopes that you go, oh, wow, this really is serious information. And you go and you read that book. I'm warning you, these are like graduate level math books, but there is indeed very valuable information pertinent to retail trading in them. So that's what I would recommend you do. Go on the channel and watch the videos that I have. I think that I need to do a little bit better of a job on some of the videos that I've got about like, because for instance, I have one video that is like where to start if you're a beginner, right? And I tell them, and I tell you in that video, well, what you really want to do is you want to learn as much about your specific market as possible. Like if we're in the treasury market, then we got to go, what are the things that drive the treasury market? What are treasuries? What are the different components of an interest rate? These sorts of things, right? I don't have that information on my channel yet, but so that's why I'm kind of going back and going, oh, okay, we need to be a little bit more complete of a resource. So let's make videos about that stuff, right? But that's where I would go, okay? Because what you're going to do otherwise is you're going to go and find this trading course, you're going to go and start it, and they're going to teach you a bunch of things about price action and maybe teach you about some trading system. And they'll tell you things about risk management that are oversimplified and that you can find on this channel already anyways. And then in the end, what I found is that people tend to be disappointed in all of that. So I wouldn't really recommend going to trading courses first. I would instead tell you, see what you can read online, see what you can get from YouTube videos, go to books for more advanced stuff. And when we're talking about books, like seriously, I don't know any other way to put this, but like what makes a good book for trading? It's going to be a complicated book, okay? It's going to be a book that would be like a textbook for a graduate level college course. Those are the kinds of books that you want to be looking for, okay? Like I'm doing machine learning right now, and I read I was like, okay, I want to do the machine learning thing. I'll do like self-study. This book has all of these exercises in it, so just do all of the exercises. Well, I can't find the teacher's manual. And the very first question that they ask in there in the first chapter, it's like, how are you supposed to do that? It's like, this is something that must have been taught in some statistics course that would have been a prerequisite to this book, because I have no clue how to even begin to approach that problem. Okay, well, I think that on this trade here in the Treasury, I didn't expect them to come down this low, and so I am going to puke it all into 20.5 and take the small loss with the intention of maybe trying to average into and build a position with interest rate at 3. Yeah, no problem. I really do have so I was making a video today or last week that was like an absolute beginner guide. Right. Primarily because what I find happens a lot is people are like, well, where do I get started? Which platform should I, how do I even like get put on a trade? Right. So this one was more about go to NinjaTrader, get a demo account. Here's how you place a trade. And then here's how you should think about strategies. Go and find out information about the market and use that to try and predict what kind of orders are going to come through, whether they're going to be mostly buy or sell, and start trading off of that. And then it's building that experience, right? And as I was going through that, at each step, I was like, well, and you can watch this video about that. What's the best platform? Well, here's the platforms that I use, and there's a video about that. What kind of a computer should you have? There's a video about that. What kind of monitor should I have? There's a video about that. How do you trade the news? There's a video about that. But I don't know if somebody coming in on the channel actually sees it as like a unified education course. So that's kind of, I think, the next step that I'm doing is like filling in those little gaps and creating like a full education course that you can sit and watch on the channel. like this one playlist of 30 videos that you watch that, and that's like everything that you need to know, is I think should be the goal now. Okay, do you think the market will rally or fall if non-farm disappoints tomorrow, given the FOMC meeting yesterday? I think that if the economy, if the well, okay, the one kind of weird situation that you could get with non-farms tomorrow is if the report ends up being hot. Like if the report ends up being really, really good, then you might see the market move back into turbo mode where they're like, oh yeah, they're going to have to push interest rates to like 4% and all of this sort of thing. But I think that is probably rather unlikely. So I think that you will see a regular sized move off of it based on whether or not the report is strong or not, and indicates whether the
WTI crude here extending gains as well.
Whether the economy is strengthening or weakening. But I don't see, because the Federal Reserve meeting was such a more important thing, I don't really see any like super entrenched, wow, gold is just soaring now. You're asking, will everything fall apart if they get above $10? Well, 110, they just blew through that like it was not even there. And I can definitely see, as oil spikes there, the S&P 500 getting weak and the interest rates strengthening because they're expecting that they'll have to fight more inflation from the oil. Okay, so let's see here. Did I miss an important headline from oil? IEA head says 2 oil stock releases so far are only 9% of overall stocks. We can come back again if there's a problem. Nah, I don't think that's it. Launches plan to refill emergency oil reserves, says CNN. That was 10 minutes ago. No, I think we need to go a little bit further back than that. Maybe that story could be it. I don't know. Something's definitely going on here in oil, though. Something's definitely going on. The degree of this down move here was pretty excessive, right? Like we were thinking, oh, I would like to go short interest rates again. And we're already back to 3%, which is basically what we were before the Federal Reserve meeting yesterday. So, no, of course he says that. GOP fixation on Supreme Court leaker a sideshow? Yeah, of course you would want to say, oh, we don't care. That's Adam Schiff saying that. Biden administration will seek to buy 60 million barrels of crude oil. Yeah, that could be it. Well, let's go back and read that story. Where is it? CNN. Yeah. Okay. The Biden administration plans to seek bids this fall to buy 60 million barrels of crude oil as the first step in a years-long process aimed at replenishing America's shrinking emergency oil reserve. Okay, so there was another headline I just read there that where they were saying that they've only released like 10% of the reserve or something like that, right? So we've got 60 million barrels that they want to replenish, and they're talking about doing it very far in the unspecified future. So if that is what they are moving off of in the oil market, that kind of looks to me like a knee-jerk reaction to a piece of news that doesn't really, they're misreading it. So maybe we could go short oil here. Well, I'm not going to do that because I never touch oil, but maybe we could go short the interest rates here now that we're above 3% again. The problem with that one is that kind of the downtrend the selling pressure, you could say here, has been pretty persistent from the beginning and was well before that piece of news was released. It also seems to coincide with some Japanese yen weakness. Sometimes it's hard to judge the strength of a move in the Japanese yen. But we may, they are starting to trade some big numbers down in here, right? So I'm going to let it cool off a little bit, and then maybe we will try a reversal trade. I always hate taking reversal trades, but kind of seems like that's what this situation may call for. But they're selling pretty aggressively here. I don't know. That's someone that really wants to sell, for sure. Once they dropped here below like 18, it really started to accelerate, didn't it? I kind of feel a little bit flat-footed about this, but really, like, this is a move that we didn't expect and don't really have any kind of information that could help us predict those orders. So it's really okay. It's just kind of let it do its thing. But let's just watch this area. Like, there was a lot traded at 16.5, right? And I don't know how much of that was driven by oil, but certainly the last like 5 minutes of it, it seems like it might have been accelerated by oil. Really, to do this, I think we'd have to see a big change in Japanese yen, though. But we are kind of getting hints that that's happening. So they're relatively tight here. I'm actually, you know what? This is kind of crazy. This is crazy, but the 5-year had some liquidity on the inside. Nobody was trading it. I'm going to see if I can get something started here. They're going to just leave me in the middle, huh? That's interesting, the way that turned out. Okay, well, we might have to sit through some pain here. Okay, so there's still some liquidity at 16. There's also a big order way below us in the 10-year to worry about, but yeah, okay. Well, they got through that order, but then there wasn't anything at 15.5. They did hit back though. Or more market makers, but 6J's not completely telling us where this goes. So okay, but push back to 16. Volume both ways there. A decent amount of volume both ways there. Still not seeing any other news come through here, so still seeing a lot trade here between 16, 15.5 and 16.5. That's a lot. A lot is traded here in this location. Like, think about some of these, like 23.5 was a lot. They've already more than that, and at multiple prices as well. So that doesn't necessarily mean reversal like I'm looking for, but it does mean that price could kind of get stuck here. In fact, I think something that you may be likely to see is another push. Like they may actually get to 14 and then kind of get sucked back into the hole. So maybe I may be a little too early here on this. But I saw that one lot sitting out there, and I just couldn't help it. I was like, I think that we should do something here. Okay. You're still thinking, but you're not really getting. I'm not really seeing an ability to hold a bid at 16. There you go.
EU's Energy Commissioner says we have a potential for another 50 billion cubic meters of liquid natural gas this year additional.
I don't know. I don't know if there's enough sell orders out there for this guy at 14 to get filled. Do you think? We'll see. There can always be more. There can always be more. Oh, there you go. They're hitting him already. Oh, look at that. That was pretty easy. I'm quite surprised how easy that was for them. Can you kind of see here though that once the big transaction took place and everything kind of chilled out, that the gravity kind of pulls him back? There's 16, but can they hold a bid at 16? That's been their problem, right? They just need to like tick up and have somebody like stack 1,000 there, and then maybe we might reverse a little bit. Nope. What am I seeing here in Discord? Red volume unit at 118, 116, which could Okay, so somebody actually did bid a lot there at 16, but they took him. But you know what? That's still good, especially if they can bid again and hold another good bid. We'll see. But you are getting a little bit of a hint of like a low latent liquidity problem there. Was there a big move on the ultra bonds? What should you do to start trading ZNZBZF? Well, so first of all, if you're going to trade the treasuries, I really think you want a good DOM. Okay. The next thing is you want to understand as much about the interest rate market as possible. What sets interest rates? Like, what are the different components of interest rates? What are the different policy tools that the Federal Reserve has? Next thing you want to do is you want to go through all of the economic reports that are out there. Like the Forex Factory has a really great calendar. Like, go through every major economic report on that calendar and read what they're about, what they do, right? That's going to give you a really good base that you can use to start speculating in treasuries, right? Then go and watch my videos. I have a lot of videos about order flow and so forth, and that's going to kind of help you read and understand the volume that's coming through the market so that you can make better decisions. Okay, so they're coming back up to that 16 several times, but then they push back down and hold it. So you can see that there is a liquidity hole at 16, but there's still a lot in the 10-year at least that really wants to sell. So I think that means that we're probably going to start rotating around this 16 for a while, unless something like just breaks and the treasuries just push to a new low. The problem is that I'm really not seeing the driver for why they're starting to be so bearish. Is there a scaling system of that? I don't think so, because the problem that you're going to get with any kind of a system like that is, how do you factor in the individual context, right? Like, you got to think about what are the risks, the unknowns in the economy that traders are most concerned about at that time, right? Like right now in the market, Federal Reserve is continuing to say, like, the economy is doing pretty good because even though GDP was negative last quarter, the consumer still looks really strong. So we're not concerned about it, right? So any kind of report about the consumer, if it comes out and it's bad, that would really move markets, right? In other words, there is no substitute for just knowing what's going on. Ooh, what's this? Nassim has a video he posted here on Twitter. I don't know. I thought it was maybe a better quality video, but it wasn't. It's still like recorded with a crappy iPhone.
So in 10 minutes time now at 9:40 a.m. Eastern time, we are expecting to hear comments from Bank of Canada's Shembri giving a speech.
Wheat.
Shembri will be speaking
I
to
don't really have
NACCA
wheat up
in
here. I
Indigenous
forget what
Prosperity
the
Forum,
symbol is
the
for that.
Bank
I
of
think I have it
Canada
on my
journey
watch
of
list here.
how best to contribute to economic
It's
reconciliation.
not towards the top of my watch list, though.
Indigenous peoples and promote their economic inclusion and prosperity.
Something S&P 500 pushing down here on the open. Let's see which way they turn. It's right now it's looking to me like that the market is just trying to test the yesterday's action. Like there's people that came out and they said yesterday didn't make sense and we're gonna wipe it out. Is kind of what it looks like to me. By the way, where are we at on the volume profile? Okay, so we're getting back to prices like from the news, right? I still see there's a little bit of the gravity towards the 16, but they did push quite a bit past it, right? So there's a big offer at 16. That's interesting. I wonder. I don't because of the situation with the liquidity being low. I didn't get any like notifications that those got ticked or anything like that. But unlike news trading, because most of the times the context or the reaction of that moves will be set up in advance and not when the news will be published. Well, I think the reason, when I talk about news, the only reason why I talk about news a lot is because it's like the easiest example to talk about the things that we're talking about, right? Because really the reality here is you're predicting orders, right? There's a lot of different things that can predict orders. And what predicts orders is not just the change in fundamentals. I think that's the mistake that everybody makes is they say, well, the market is informationally efficient, but that is just objectively false. The market is not informationally efficient. And what we got yesterday in the FOMC is a really, really great example. Everybody thinks that the market has already priced things in and so forth, but the reality was that there was these guys that had this huge bet on 75 basis point hikes that didn't happen, right? So what you kind of have to understand is that the market for the last 2 weeks or so has been wrong about something really major. That the pace of interest rate increases is not going to be as aggressive as they thought it was, right? So if you came in and you have been believing the charts for the last 2 weeks, and then all of a sudden you see this change, it doesn't make any sense, right? But when you realize that they've been wrong all of this time, and the reversal that they saw is basically them having to acknowledge that they were wrong, all of a sudden it makes a lot more sense, right? I'm trying to do a better job of helping you sort these things out, because it's kind of, there's a story to it, is really the thing. So what I need to do is I just need to be better at storytelling, right? But the thing is, so many traders don't want to look at the story, which is a huge mistake. They want to just look at what happened in price. There is definitely some big buyers coming in here in the treasuries. I have to say, like, even though that was some really aggressive sell side action and everything, like, look at the buying. The buying in the 10-year just in this area has almost completely eclipsed all of the selling that they were getting. Good explanation. Thank you. This is a situation. This could be the inverse sine law. Like,
comments from Bank of Canada's.
We just got a meta order. I think that part of what happened was, okay, so if you get a move that's like this, right? Oh gosh, I hate it when it does that. We have a move that goes down and then it comes back and then it goes, kind of back for a while. If you don't wait for the book to recover, this period right here, and a large meta order comes in buying, then of equal size, it's gonna completely wash out this move. Okay. Now what we're getting is slightly different, because what happened was it was going down, and then before it was done, some people started coming in and buying. So it actually came down, and now we're getting, so now we get to see how big this other meta order is, because it's kind of starting to look like this other meta order is actually really huge, because they bought up a good 5, actually, it's actually more than that, between 5 and 10,000 contracts here in the Treasury that it completely eclipses the entire down move that we had in the 10-year. So all of this stuff up here above us, of course, one thing we got to remember, okay? This is going to be a magnet. That's why you kind of want to wait. That's why when they're doing this, it's kind of better to wait till here, because this is the point at which this magnet down here is weak enough that we can get away from it, but that these offers up here are still weak, right? So it's likely that we still rotate around that 16 a little bit. But what we're seeing right now is very strongly suggesting that there are some buyers in the treasuries anywhere above 3%. Really, actually, it really came in across the curve. Like there was some really, it was most aggressive in the 30-year at first. But now you can see in the 30-year, like they are very net positive on the day in cumulative delta in the 30-year. And also in the 5. So the 10-year is really the one lagging here to a large extent. We should acknowledge that they all kind of pulled back pretty aggressively here. Like, okay, the high was at 17.5 in the 10-year, but the high was a good 4 ticks above here in the 5. There you go. Oh, is that the Financial Juice team? Yeah, it is. Oh, I didn't know that they had a YouTube channel now. I've been subscribed to. Oh, I guess all they've done is a couple of live streams, I guess. I got you. I got you. Okay, well, there's them breaking another new swing high. And it looks like the 5 is going to go too. S&P 500 is just chopping around like crazy at 42, 45. Remember, well, I guess it's still like really far up from yesterday in the ES, isn't it? 4150 was kind of the really, yeah, okay. So with the equities, kind of the setup you've got there is 4150 has kind of a strange kink in it in the options gamma, and 4300 is kind of resistance. So it looks like right now what's happening is the market felt that resistance is coming back down. But I think that the market is still kind of put heavy, so it wouldn't surprise me to still see some strong rallies come out of this one. But I'm right now more interested in what the Treasury is doing.
Not to comment on the current interest rate and policy environment in his speech. Does say a lack of access to financial services.
I'm getting that there was a Bank of Canada's Chambry speaks, and they're not saying anything about interest rate policies. So that wasn't really one that was on my board, but good, it ends up not mattering anyways. Oh, now that's interesting. I didn't see the other contract that went there, but it looks like that whoever I did the market making with there at 06 decided to puke and just still ended up making money. So now probably one of the robots is short. Okay. So there is still a little bit of weight on them here. The buying in the 10-year has kind of leveled off. The 5 and the 30 are still very strongly buying, and the S&P 500 is starting to mount a rally. Elon Musk expected to take over as CEO of Twitter once his $44 billion deal to purchase the social media platform is complete, report says. Yeah, that'd be like 6 months from now, so. So we did get a good higher high there, but the market is pretty wobbly here. So this is the thing that's been screwing me up all week is that like normally the treasury market is like this, right? And now it's like so you really got to pick your spots well. So what we should probably be watching for now is maybe some signs that the liquidity down in here is recovered. So it's been about 15 minutes, which is probably not long enough. It'll probably be better than it was, but you're likely to still see that 16 trade a lot. Good explanation in my opinion. For example, the 50 basis point hike this time was really well communicated. Everybody actually knew it. Well, but when I'm talking about 75 basis point hike, we're not talking about this hike. We're talking about June. There's a bunch of people betting that June was going to be 75 basis points. So yesterday it was actually like I think 55% chance of a 75 basis point hike, and then by the end of the meeting it was basically they had completely wiped that out. Right? That was where the change came from. Yeah. But for sure, people are betting on surprises against it. News are just the mirror of the current macro environment, and these things you can easily follow with data from the Fed even before news. Yeah, yeah. Because again, the mistake that people make is that they think that the market will follow the fundamentals, but what the market follows is the orders, and so you have to think through the process of what are the orders going to do. Because what the orders do could be counter to the fundamentals. And why do we make that mistake? Because traders largely believe in the efficient market hypothesis, but we know that it's false. Yeah, so you see that move down through those bids. It didn't take very much. Now, some of that is probably being driven here by the 6J. 6J still looks pretty heavy. But there was definitely buyers in the treasuries, especially the long end of the curve. Let's kind of mushy all through here. Maybe, okay, so there is maybe a little bit more volume being placed at 13. Man, there is a lot of level 2 changes right now. Actually, the pace of the market orders coming into the market slowed down there and maybe reversed, but like look at all of the changes that are happening in the book. It just flickers all over the place. Well, I think here that I had, yeah, I'll give him there. You know, it wasn't a terrible setup or anything, but in the end, the paying for the spread in the 5-year was killer. So I think that experiment was a dismal failure. It worked initially, like when I hit it, they definitely pulled it, but like the crazy thing was I saw the spread was really wide, and like as soon as I hit that, then they widened the spread on me again. So I guess I probably should have expected that. And kind of the problem is, even if they do reverse, I don't know if I'd be able to really get much out of it because of what they're doing to me on the spread. Would really need a really strong reason. Okay, there's some big absorption, 12 and a half.
Says we are announcing new sanctions against Russia. Japan's PM Kishida says this will expand to export ban to Russian military firms, saying 140 individuals will be added to the asset freeze list.
So some pretty big icebergs there at 12 and a half on the bid. It looks to me like large buying is still there in the treasury, but the sellers are more than happy to give it to them. I don't know what's driving the sellers. It could just be completely, market action driven. They might not have any super strong. Okay, well, Japan Prime Minister Kishida is speaking. The 6J is getting hammered. That's kind of one of the bigger drivers here, is that the 6J has been weak and the dollar strong. Bond move is one for the ages, says the Pit Chicago. Yeah, what's going on here is quite extreme. Look at that. Okay. All right.
ECB's Ren says the ECB.
Well, I
will
don't
raise
see
rates in
I don't
July.
see a large iceberg there anymore. And they did come down to the low, but the sellers aren't really well, okay, there you go. So I was about to say the sellers aren't really aggressively pushing there yet. Oh, there it came. There was a few stops, I think.
Also seeing comments from the Shell CEO says we are not seeing oil product demand destruction.
Hmm. Some of this action really does kind of make me wonder if there's something going on in the market that we don't know about. But given the situation, and it's just after some pretty big, in between some pretty big market events, I really think that the probability is that this is all just internally market driven from positions and people wanting to trade and so forth. Pessimists coming into the treasuries here.
And ECB's Ren adds that the
But
ECB
this is, I don't think I should be giving this too much leeway, so I think I should bail on that one too. Now, if there really is going to be like a crazy bear move, well, is it really 5 basis points above 3% now? I don't know. Maybe I should just kind of sit out here now because that's a lot. I don't know, guys. It's kind of weird. That's a strong move. It's really when you think about that, this is actually a whole 10 basis points on the day from when we started. And I've just kind of been sitting here going like, I don't know what's going on. I guess kind of because largely I was expecting the move from yesterday to continue through. Orders are just the product, not always. It's orders are not the product of fundamentals. Orders can be the product of changes in expectation about fundamentals. You see the difference there? Oh, these short-term moves like yesterday just noise because the fundamentals have not changed. Yeah. Well, yeah, changes. But remember, though, it's just changes in expectations about fundamentals are what creates the orders, right? So, was there a change in fundamentals? No, there wasn't. So, can we say there was the fundamentals that are driving it? Not necessarily. But some moves are just internally market generated or speculative, right? Well, they kind of look like they want to just keep going here. I don't know, man. From a larger perspective here, the changes that we've seen here in the treasury are really unprecedented. Like, that was an insane amount of buying that came into the treasuries, and the sellers still overwhelmed it. I think that it might not necessarily be in this case that that there's a really super strong sell meta order so much as it is that something is happening with the Japanese yen. Like the Japanese yen still looks really weak. This is a bad idea. I don't know what I'm doing over here. I totally forgot that I had that on. This is turning into crazy town. I guess I could go long interest rates to stop it. Right? Damn, I'm thinking this has to be some Japanese funds dumping.
Zero when autumn comes.
This has to be Japanese funds dumping. It's gone so far now, though. I don't know. I mean, we're not to yesterday's lows yet. Overall, the curve is still steepening. So I think that kind of my larger term trade is probably still intact. Clearly, though, they didn't really care about the liquidity hole. They were just going to bail on everything. And well, they're coming back to 4,200 now in the 10-year. Or sorry, in the ES. So now I'm kind of sitting here thinking, should I try and get short interest rates here? Try and plan this move, but I still see too much risk of this bouncing back on me. I took 2 bad trades there. Bitcoin getting hammered, by the way. But I'm also thinking, well, since I don't really know what's going on, it may be best for me to just stay out of it. Or no. That was a pretty wild move for me to miss, though, right? One of the things that I find frustrating over and over again, though, is that the strongest flows in the market are not driven by fundamentals or anything. The strongest ones in the market, from what we can tell, are really truly random. One needs to rebalance or something. I think that's what's probably happening, is that some Japanese mutual funds are making some moves here. Right? I don't think that we should read anything into the fundamentals about this. Could mean that there may still be some guys out there willing to sell it and keep rates close to 3, but I don't know.
So the US mortgage rates jumped 5.27%, the highest since August 2009.
Not sure what you mean, NASDAQ killer. I'm also thinking, whoever it was that was buying up there, that's kind of like a hedge fund. Did they bail on this further move lower, or are they still in it? Well, on the 30 and 5, it didn't really change. In the 10-year, it did. But I think that it would make sense for it to change in the 10-year because those funds have way more 7 and 10s. Euro trade, I really want to. FOMC is a strong fund. Yeah, but that happened yesterday. I mean, I suppose it's possible that somebody said, oh, yes, we have a really strong opinion on the FOMC, but we're going to wait until tomorrow morning to express it. The correlation with the 6J, though, I think strongly suggests that it's Japanese hedge funds making moves. Or not hedge funds, Japanese pension funds. Like, their currency is just too weak. And really, this attractor at 16 was really strong. So that didn't go well. That didn't go well at all.
ECB's Ren says tells the Daily Helsing Sommat that it would be reasonable to hike deposit rate by 0.25 percentage points, and by autumn it would be at 0. Ren says that monetary policy normalization could then gradually and proactively. So then that's ECB's Ren there saying that monetary policy normalization could then continue gradually and proactively.
We'll see. You know, like one of the things that's going to be hard here is these guys could be selling for a while. I don't know how much they're going to sell. But when they're done, the chances of us floating back to 118.16 are pretty high, actually. So, I don't know. It didn't feel like a big move. And that's probably just because we haven't been paying it too close attention. This move is 10 basis points. That's huge. That's huge. Yeah. Well, I'm very upset about how I took that. Like, I may be fine, but I really hate, okay, so some big stack showing up here.
Seeing
That's
the US
curious.
Treasury issuing Russia-related general licenses.
So you see that big stack shows up, they start selling it, and oh, there just happens to be 2,000 sitting there waiting on the bid. So that is the kind of spoof that kind of looks like somebody trying to get filled on the bid.
Japan's Prime Minister Kishida says
the only problem with that is that I think that it would be relatively easy to get any of your bids filled at, especially at 09. So that large offer seems kind of unnecessary. He moved it down.
Japan's Prime Minister Kishida.
Now it's just sitting there.
There are consequences to Russia's violence.
So the thing that we're hearing is that the Japanese Prime Minister is saying stuff about Russia. I wonder if that's part of what's been going on here. I don't know. I still kind of feel like I'm missing something larger, though, especially because of the S&P 500 reacting. Yeah, Biden begins buying back oil to refill strategic reserve. Will send gas prices back to record highs. I think I kind of already explained how that one's probably an overreaction. Lira. No, I'm not sure. Not too sure. They're still having trouble there at 10. Okay, now the large offer disappeared. Hmm. Yeah. Stop it. Should have gotten out of that as soon as it was like, it's not didn't get a good hit.
Japan's Prime Minister Kishida says we are still in the transition period from COVID, and will remain vigilant as we return to normal. Says we cannot be complacent on COVID.
Well, do like a more trendy move. This move down though, there was a really strong retracement around the 16, but this is a really strong trend, right? Like, we're getting into the kind of action where you really have to ask if this could just go all day, right?
Kishida's just adding here that
Kishida
there
is
will
still
be COVID
speaking.
countermeasures in June.
See, no matter what I do, it's just like a bad entry. The whole treasury market is just kind of like stopped there all of a sudden. Dude, but why, what?
Kishida says that the energy price rises resulting from Ukraine could have structural change to Japan's economy.
Oh, well, I think that our strongest theory for why this move is happening is because Japanese pension funds are dumping. The currency hedge risk is becoming too high and they're having to sell their treasury holdings. I don't think that any of the theories about yesterday's move was a fluke or they still think that interest rates have higher to go. Those may be true, but I don't think that they explain the volume. I think the only way to explain the volume here is like Japanese pension funds or a sovereign wealth fund. That's because it was really some pretty strong order flow that clashed together there, and the sellers pushed through it. And Nassim Taleb has a chalkboard about his position versus the establishment. So bailouts against Syria, Libya against Saudi Arabia, against Ukraine with vaccines, with Fed res. I don't know what that means. Or with taxation against general medicine with. Okay. Well, they're so close to yesterday's low. That would be something if they came short of it, but the S&P is very unhappy about it. Man. Okay, now I'm seeing a level break set up at the lows.
Japan's Prime Minister Kishida says it is desirable for the United States to return to the Trans-Pacific Trade Pact.
There you go. Might be, again, a short-term move yesterday. I was short yesterday because of fundamentals order flow or stopped out. Now I am short because of fundamentals order flow. Well, yeah, but this is again where I'm saying maybe Japanese funds are forced to sell because of the current fundamentals of their currency. Well, yeah, it is their currency.
With US President Biden.
Yeah. I guess the thing that I'm trying to come across is that I think that the natural response that a trader is going to make is this is the counter reaction to what happened yesterday. The people that disagreed with what happened yesterday are coming in here. And I'm saying the volume and the way that it played out, I think actually makes that unlikely. I think that this is forced selling. And the reason I think that's important is because if how do I put this? The reason I think that that's important is that if it's the Japanese hedge funds, number one, you're going to continue to have consistent trend until they're done, and number two, when they are done, the market is going to come balance back up into a spot. I thought it was at 16. I think I was wrong about that because when I was saying 16, I wasn't thinking Japanese pension funds, right? I think at some points during this, I was just also being a little silly because again, like if I take a loss, I stop thinking as well, right? But I think that I've got a pretty good framework to work off of here now that if it's the Japanese yen, that you could continue to see some strong trending action. That said, we do appear to have formed an area where I didn't see large transactions per se, but the book does appear strained. Like they're having a harder time getting the volume to come out for them. I'm a little frustrated here because we did not get paid for the risk that we just took on, even though it moved lower. Okay, oil is coming back, by the way. Oil came back really strongly. Still a big offer sitting there. This has happened a couple of times today, and it didn't end up being a spoof. Like it disappeared and they moved up. But it still is kind of like, why is that necessary? Well, there's S&P 500 rotating around 4,200 now. Oh, it's only 8:16. I'm okay. Today has been a long day, guys. Wow. I just read Tobias's comment again, and it like really bothered me because it's not the fundamentals, right? And remember, the fundamentals don't move the market; the orders move the market. It's really important to understand. Shit. Don't like that move. Oh, that's coming back, but right, the Japanese hedge funds are not selling because they're making some bet on the fundamentals of their currency or anything like that. They're selling because the cost of them holding U.S. Treasuries is too high now. It's a different kind of trade, right? To make that trade, to front run that trade, you'd have to understand more than I do about what the costs that are associated with that. That was a really strong pushback. So that was somebody trying to aggressively buy here to try and create a short-term reversal, and the offers just gobbled it up. Not very good for our trade, though. That action, that strong buying behavior that we saw there, location of it is probably really important, right? Well, I don't know what to do here, guys. I've just been dismal decision after dismal decision, I think.
So just a reminder for you, at 10:30 a.m. Eastern Time, we do have the US EIA natural gas change BCF, forecast 69 BCF, previous 40 BCF.
Maybe it's done. They are still all in the buy. I'm going to take one more.
Crypto fear and greed index sitting at 27 out of 100, indicating fear.
There is some things in the volume kind of suggesting that maybe the sellers are done. Look, that was some big buying right there. Big iceberg at 09. 09 is definitely the largest now. Almost as big as, well, actually, at 16 rather was almost as big, but the 09 is bigger now.
Taking a look at the fear and greed index, it is 41 out of 100, indicating fear.
No, 55 would have been a better spot. Hmm.
Pioneer sees the US adding 500 to 600,000 barrels a day in 2022. Says the US oil forecasts as way too high.
Like there's a good iceberg bid there in the 5-year. But that might mean back to the center node. Yeah. Well, there's a lot more volume trading there now. Like there was another 2,500 iceberg at 09. So I don't know if that means reversal, but at least rebalancing. Jeez. Yeah, my entry was terrible. Well, like when I look at that and I'm like, oh, I could have had 06. I feel so stupid. There's the S&P 500 taking another clip down. We're still not to 4150 though. Now I'm starting to see all of the people on Twitter saying, "Ah, see, the chart said that this was going to happen." No, no, man, Bitcoin just got creamed, man. Am I seeing more steepening coming in here? Yes, I am. Where did I?
10:30
Oh, it's
a.m.
down
Eastern
here.
time. We do have the US EIA natural gas change BCF.
Okay.
Forecast 69 BCF, previous 40 BCF.
In terms of the interest rate, that last little move actually wasn't that big. Well, guys, I think that today I don't know what's going on and I paid dearly for it. Yep. This kind of what's happening now is like I'm getting stuck in the chop, going both ways and not being able to really hold a stop well. So best for me to quit, even though I really want to keep trading it. Part of the problem here is that, like, I think I understand why it's doing what it's doing, right?
22.
It's just that I needed to understand that up here. Now that we're down here, it maybe doesn't matter. I suppose there's still a chance for them to go to yesterday's lows, but See, if I wanted to reverse, this is where I should have been doing it. Hmm. Another thing that frustrates me is that I lost about 60, which is about the whole degree of this move from here, right? From 3%. So like I was over trading too. That's why I think I have this going through my head like that one lot sitting there looks so tempting. Yeah, it's okay. It's okay. I need to let it go. Man, there's a big old order down there, 137.10. Japanese yen is kind of starting to point itself down a little bit again.
We'll surely be receiving the US EIA natural gas change BCF data.
Tough break for gold, too. They were looking okay there at 1900 and then they just get smacked back down again, right? Set a framework for how a market will behave in different macro environments. Yeah. You know, the thing is, this whole thing with the Japanese yen is really quite an interesting and unusual dynamic that I don't think very many people would expect before it started happening, you know? And I'm not talking about today. Like, this is really like the larger picture that, like, you know, there's always been a really strong correlation between them, but it's gotten to this point where oh man, what's with the spread here? Anyways, it's gotten to the point where the difference between the currencies is so strong that it reduces treasury demand. Is a really weird
77
dynamic.
BCF. That's a build on the forecast of 69 BCF.
Well, S&P 500, let's see, a couple of things that I'm noticing that might help. First of all, the volume in the 10-year
And the US
is like really extreme. So traders really started trading this.
You don't want to have a read.
Number two, so we should keep that in mind. Maybe we will get a good hero trade, but you just be advised that like this is kind of on everybody's board now. The rotations in the S&P 500 are starting to contract, get a little faster. Pretty much everything sold. Corn's down, Bitcoin's down, gold's down. You know, oil initially up this morning. They sold that 7 o'clock move back down. So you got a BART over there. And yeah, I don't know. The 5-year is a little weak. So we are actually finally getting flattening coming into the market a bit. There's definitely big trades happening here in the Treasury. Really could do anything from here. Well, they broke through a bid iceberg there.
Building on the earlier headline.
5 years looking kind of aggressively down.
22. Canadian Natural could reach $8 billion Canadian dollars target in late 2022, early 2023.
A good amount of volume traded back and forth there at 08. Okay. Not quite back to 09. Close. I mean, that was a really long downtrend, so might take a long time for them to just chop around in this area if they ever do come back up. Didn't expect such a big reversal in the ES today. Me neither. That's like really still some crazy things going on here. Like here's the bigger thing is that all of this movement that we've had in the S&P 500 over the last like 3 weeks leading up to this Federal Reserve meeting, I thought that a lot of that didn't make sense. Like, I can understand like maybe the economics are weakening a bit, but the degree to which some of these cells have played out were just so insane, you know, really just so insane. They really didn't make sense to me. And every time that I was looking at it, it just looked to me like the options are causing the market to overreact on every little move in the S&P 500, right? And that may still be what's going on. Like yesterday was like a what do you call it, a bear market rally of sorts, right? But then when push came to shove, people still want to have puts. They didn't change. And that's the other thing that I think is really probably the most interesting part about this market, and the thing that I watch, and the thing that has kind of been really driving my longer term investments, is that we have like one of the most negative sentiment readings ever right now, right? How can the investor sentiment be so negative and yet the consumers still be relatively strong, you know? That doesn't really make much sense to me. And I think that kind of suggests that you're going to get a lot of selling in the S&P 500 that doesn't really make a whole lot of sense, but that in the end it will reverse higher. But it's going to be it's going to be a long and volatile road to that happening. Okay, well, maybe we're getting something now. They're kind of the top end of the range there at 10. But at the very least on that one, my spot that I chose was better. I don't know why I have such a hard time when I can see this as a range and everything, that like I don't want to take it. Like when it gets to the other side of the range, I don't want to take it, and then I miss it instead. And then when I do want to take it, it's on the bad part of the range, and so I get a really poor entry. I've been doing that a lot lately. Even as I've been thinking about it. Maybe I'm just noticing it more because I'm thinking about it so hard, but that's been the most frustrating thing for me over the past month or so. Well, I think that the timing for maybe a reversal in the S&P 500 maybe makes sense, but the price doesn't. I would have thought, if we were at 4150 right now, I would be like, heck yeah, let's try the hero trade in ES. Yeah, okay. Some leaners at 10.5. I have to say, when I look at the cumulative delta, the buying fear through this is actually still consistently up. So that's probably also a key driver behind why I didn't read this move very well. So it was a combination of me not understanding why it was happening and not being able to see it coming, and that there are some things about how the volume played out with this move that gave me a bad read. Like that trade that I took at 16 on the reversal, that probably would be a good trade. Today was just the one time where it didn't work because I didn't know there was probably Japanese pension funds, right? Well, there's ES, another little step. Okay.
So US rate futures pricing in a 75%.
Maybe when the recession has finally started, then we will recover normally like it's that. Yeah.
Fed Watch sees 83% probability.
Well, kind of one of the problems that I have right now is that I'm like, yeah, I think that you want to put money to work right now. But the problem is that it may continue to be like this all the way through the summer, right? But larger picture, this selling in the ES is very negative, and I don't know where it stops, but there's probably going to be a short covering rally in this. Because we can come up with kind of a good reason for why there would be the sell orders in the treasury, but not for the ES. I think that the ES is traders reacting to the other things. And just because we understand why these things are moving, and we think about how these traders work, they're likely to misread things, right? So you get this situation where they're all short, and then going into the close, they all have to cover their positions. It's a pretty likely scenario. Now, what price that leaves us at the end of all of that is the thing that really matters. But hey, if they want to go back to 4150, I'm all for it. In fact, maybe one has to wonder if the options are as such that 4150 is basically guaranteed. Do you think? Well, I should never say that something is guaranteed for sure, right? But let's just watch and see if they go right for it or not, or if it's more fraught than that. Hmm. Well, the Japanese yen is kind of starting to point up, but the treasuries don't seem as correlated to it anymore. It's kind of the point where you don't think it has a chance of a recovery bounce. Well, the remember though the recovery bounce thing kind of happens as a result of the close.
So the US Senate panel approves NOPEC, the OPEC antitrust legislation.
Yeah, somebody sold big time. So now here's a question: is if Japanese hedge funds are dumping the treasuries, could they also own a lot of stocks that they have to dump as well? Yeah, it has to be institute. So yeah, like the degrees. Well, actually, I take that back. I'm not so sure about that one, Captain Price. It has to be institutional big funds liquidating. Um, I think that the action in the S&P 500 could just be explained by options. Treasury, I think, is a different thing, but the S&P 500, I think, could just be explained by options hedging. Option hedging has just been leading to a lot of really oversized, crazy moves. Well, the 10-year bids being a little soft there all of a sudden. The tick by tick is kind of random, but those last two ticks down were a little soft, especially after there was so much bidding up here and everything. But you know what? Like the degree of that move for the larger that the trend was, the more it takes for the liquidity to heal, right? So it might not be a trend down day. It might be a double distribution day in the 10-year. That doesn't really speak well to any kind of a reversal, though, does it? I think that at times we did see some strong bidding that could suggest that we move back up, but this more recent action is not as encouraging. S&P 500 does appear to be reversing a bit. At least that's about the strongest. Not completely, but it's close to the strongest short-term reversal they've had in the ES today. Kind of concerning that while that's happening, that's when the treasuries decide to take another dip down. Well, there was 1848 traded at 08, so that's okay. I'm wondering now I'm starting to think that the Japanese yen is actually lagging the treasury and not the other way around. I tell you what, though, if treasuries decide to break the low end of this range, I'm sure that the S&P 500 will react again. Well, look, they just had a really strong impulse pushing them back down. Treasury trying to dig itself out there, but it not going with the offer on the 07 half. Kind of extends the node down. So it's a lot of volume to trade at 07 half. And they didn't like that, did they? Getting close for me. Time to go. Oh man, that I didn't I looked away for like a split second, and man, the S&P 500 just went. Should we come, just these last 5 minutes, let's just come over to Zero Hedge, see if they've got a story now. Stocks puke erase all gains. Short squeeze ammo and gamma has run out as NASDAQ pukes back all its gains. This should not be a surprise since the last time the market ripped like yesterday on a hike day, the S&P made new lows within a week. Yeah, that's true, right? If the move yesterday in the stocks was largely driven by short covering, then you're kind of vulnerable to it coming back on you, right? Bond yields are soaring. Now the bond yields, I think, are probably a different thing. But I don't know. These treasuries are kind of looking pretty right. Well, they're selling in the 30-year. I don't know, but you don't have to wonder, because if the 10-year breaks 05 half, that could be like some real chaos, right? Did I get anything on any of these? 8, 9, never 10. Never 10. But even on the adverse side too, it was like 10. So I wasn't really giving these too much room to breathe. I don't know. But some of these trades that I look at are kind of like seem really dumb. This one, and this one, I never got any favorable excursion on it, right? So I knew that the trend was down. But even on the buys, well, I didn't buy it as much as I should have, but so I was catching myself trading against the trend. But I don't think that's so much trading against the trend. I guess I'm still in a position where I think that interest rates are going to hover around 3, not 3.05. Yeah. And that's really the larger problem with me today. You're wrong about the larger picture. None of the smaller things are going to make up for that. Well, I'm really disappointed. It's not like a huge deal, but I'm a little disappointed. I don't think this can go on for long, though. Could trend all day today, maybe even all day tomorrow. I mean, Friday becomes a different thing, but after that, well, then they're backed off again. Watch, I'm gonna leave, and they're gonna return back to, there's gonna be like a big relief rally, probably. I should have this sitting down here at like 141.50 because if it touches, it might not be there long. When I have a day like today, it's hard to know what to tell you guys. But whatever. It's whatever. I'll have bad days. I'll have bad days because there's going to be, I don't know everything. There's going to be days where I get caught off guard for sure. And there's going to be days where I just make poor decisions. I think that's the larger problem that I have to deal with here is like, how do I, well, I've been doing better at limiting losses, but today wasn't very good. Today wasn't very good.
€3 billion debt offer.
It's like I get a little win and then big loss. And those big losses are happening less, but it's not. It's still, I'll still get to a point where I just am not thinking straight, I think. Holy shnikes, what the heck? They say shnikes a lot, right? That just got slammed to the low. I can't believe that they're not hitting into 06 yet. Wow. That is not something that I would have expected to see at this time.
UK's PM Johnson's office in a call with Ukraine Zelensky, UK's PM Johnson discussed the Ukrainian armed forces requirements, including the provision of longer-range weaponry to prevent the bombardment of civilians.
Well, I'm going to leave it. I need to leave it. It just makes me want to take more trades, right? And lose more money. Hey, tomorrow, Friday, non-farms, man. Non-farms is going to be crazy here. All right, stay profitable.